I want to share one of my most favorite covered call option strategies, and it's because I make money when my shares get taken away and assigned to a buyer, or if my option contract expires worthless. I walk away with a profit in either case. Find out what I do for this win-win. So let's take a look at my covered call option strategy. So I'm going to sell a covered call option using 100 shares of stock that I own. I'm going to collect premium for selling those shares, and then I'm going to let the option run to expiration. And at that point, there's going to be one of two outcomes that result. For outcome number one, the option will finish in the money, my shares will get assigned to the buyer, I'll receive payment and a profit from the price appreciation, and I'll keep the premium that I received. For outcome number two, the option's going to finish out of the money, so the market price will finish below my strike price. I'll end up keeping my shares because they won't be assigned to the buyer, and that's because the option contract will expire worthless. There's obviously no profit from the price appreciation because I'm keeping my shares and I'm not having to sell them, and I also get to keep the premium that I received for selling the option contract in the first place. What I really like about this covered call option strategy is that I walk away with a profit with either outcome. In this example, I'm selling a covered call for Ocugen Incorporated, stock symbol OCGN. So from my app, I push trade and then trade options. And then I pick an expiration date. So for this trade, I'm going to pick July 16th. Next, you can see that I'm selling a call. I select the $10 strike price, which at the time was paying $1.65 in premium. I have 100 shares available, so I'm going to specify the sell of one contract, and I'm going to specify the limit price as $1.65 per share in premium. So for this covered call option contract, I'm agreeing to sell 100 shares of symbol OCGN at $10 per share on or before July 16th. Now, as you can see, I've set aside and reserved 100 shares as my collateral, and in return, when this option contract gets filled, I'll receive $165 in premium. I submitted this order, it got received, and then was placed in the open market and made available for any buyer that was interested in purchasing this call. Let's jump over to my account history where I've opened up the transaction where I actually sold the covered call option contract and it was filled. So you can see that I'm selling a covered call for stock symbol OCGN with a $10 strike price and an expiration of July 16th. Now I submitted this order on June 2nd, and the option contract was actually filled that morning at 7:17 a.m. Pacific time. Now for selling this covered call option contract, I received $1.65 per share. And when the order got filled, a credit of $165 was deposited immediately into my trading account. Now let's jump forward to July 16th, 2021, the expiration date, to find out what happened with my covered call option contract. Just as a quick reminder, recall that my strike price for this option contract that I sold was $10. And now if we look at the closing price on July 16th, we can see that OCGN closed at $6.66 per share, which is more than $3 below my strike price. So this option finished out of the money, and the option contract expired worthless. And as a result, my shares were returned back to me, but I still got to keep the premium. So now let me explain what happened when I executed this covered call option strategy. So in the beginning, I used my shares of OCGN and I sold a covered call option contract. Now when the option contract got filled, I received $165 in premium, which was deposited into my trading account. Now remember, when I zoomed forward to the expiration date of July 16th, we saw that the option contract finished out of the money. So the market price was below my strike price, which means the option contract expired worthless. And so the shares that were reserved as collateral were released and returned back to me, and so I maintain ownership of those shares. So at the end of this option trade, I finished out with a profit of $165 in my pocket. So in my book, this covered call option strategy did work, and it worked well. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. You can download it at my website, simpleoptiontrading.com/one-button stock screener. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.